Good morning, traders from each and every part of the world that you're joining this series of the Daily Morning Market Call. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your broker linking you to the international global markets to access various financial assets. Now, we'll begin with our usual routine, today being on the 10th of March 2025. By looking at the forces moving the market, what has been happening recently, and then we move directly to the charts to see possible price movements. But before that, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video to mean that you could access this YouTube video at your own convenient and free time at HFM YouTube channel by simply searching HFM Kenya. After you find the page, kindly like, subscribe, and click on the notification button so that you're not left out in future content that we produce from time to time, and also so that this information could reach more and more people to enhance on financial literacy in context to the financial markets. As I proceed, last week we had a quite interesting week. We saw the long-awaited labor data coming from the United States being printed, and let's see, let's just filter. And we could find all this on HFM website at HFM Kenya. So let's look at last week. Let's by calendar. It was on 7th is when it happened. Apply. Very nice. So we had the non-farmers payroll. The non-farmers payroll, although the numbers are still being revised, they're quite low. So we had the expectations of people being employed in private and public sector in the United States being at 160,000, which was higher than the previous, which is still being revised. What the takeaway home is, the number which was printed was lower than expected, so it means that we are having a struggling labor markets in the United States. Now, this is quite important because we know that labor market or the inflation data informs us of the economic health in the United States. Now, having this in mind, this number coming lower than expected could be given a few reasons. Let's look at the reasons why this number came out low and what are the implications of this in the financial markets, and what can we pair it with to even enhance our knowledge of these forces so that we apply on the financial markets. So number one, why did we have lower than expected numbers? There are quite a myriad of reasons. The first one is we have had people in the United States, especially in the imports, which is linked to sectors like manufacturing, being laid off. This is because of the tariffs. The tax that the United States is imposing on foreign companies in, for example, Mexico, Canada, China, is causing these companies to lay off people, to let go people, to fire people, so as to be able to make a profit margin by and also to be in order to pay the taxes. Now, these are not normal taxes. We see the revision of taxes up to 25%. This is quite high. Now, if companies have to pay more taxes to import goods to a certain country, they will of course want to make their profit. That the primary goal of business is to make a profit. So they're going to lay off people, and when they lay off people, the number of people being employed are going to reduce. That's reason number one. Reason number two, we see also the entry of Donald Trump into office on the 20th of January 2025 when he was sworn in. He said to have revised the government staff. Now, government employees, the number of government employees was drastically reduced, which also contribute to this number. In fact, they were given the options of resigning before any actions were taken, because his administration under the Department for Government programs, which is referred to as Dodge, being led by Elon Musk, gave a discovery that many people are working from home, and they simply put it as laxity. There was a lot of laxity. There was a lot of incompetence. There was a lot of people not reporting to their duties and working remotely on all those kind of things, and they wanted to revise this, and this caused them to send suggestive emails to government employees to resign for a pay of a number of months before the president comes to actually lay them off with the powers that be. So these numbers are contributing to low non-farm payrolls, number of people being employed in private and public sector away from the agricultural sector. Now, what implication does it have? And then number three, how can we pair it with other economic data? So, implication this has is a weakening dollar, a drastically weakening dollar, because the number of people being employed are low, and we know government will not be able to get more taxes. The perceptions of investors will be a weak dollar because of less number of people being employed. So the spending power in the economy is going to be compromised. What can we pair it with? In the same week, a day before, we had the automatic data processing, which came out also low at 77,000, lower than expected, with quite a huge number, also indicating the number of people being employed in the private sector was compromised. Another thing we can use to marry with as to why the dollar is losing its value, apart from NFP, ADP. So we see ADP and NFP telling us that we have a struggling labor sector in the United States, and also the third one is Trump's tariffs. Now, the tariffs which the government of the United States is imposing on imports from certain countries, these countries are not going to comply. They will try to negotiate, and if possible, they will also try to retaliate. Now, which a good example is Canada. Canada also imposed a 25%. So we see a tit for tat there. 25% on United States imports of up to $155 billion with immediate of $30 billion. So this is also weakening the dollar, because now the dollar strength beyond the boundaries is compromised because it's not being exchanged, which is would possibly give a negative balance of trade. Now, why, somebody would ask, why did the United States take the first step in actually beginning the trades war? Because trade tariff is simply a trade war. I put more taxes on your imports. You have the options of negotiating or also putting more taxes on my imports. Why did they do that? Because the United States is quite the most powerful economic house in the world, with quite diverse economic sectors that is quite attractive. Globally, if you do business in the United States and you succeed, the returns could be quite high. The different states, the different diversities, the spending habits of people there is quite high, so it attracts more people. So having that in mind, they would take the initial step of pushing for a negotiation of trade deals through imposing high taxes, because they know the partners, they may have powers, but not powers to that extent. Okay, so we see they quite have an upper hand on that. We go to the charts to see the implications of this. Good morning, Joseph. Good morning, everyone. Good morning, everyone coming in. Nice. So let's begin with gold. Gold is also still bounced off from the last week's area of interest at 28.75.6 from point what is that is 60, and we see gold attempting to go back to the all-time high. Will we get to the 3,000? Possibly yes, because the trade wars that are happening are causing uncertainties. Uncertainties are bringing about tensions, and that will have investors put their money in something safe. And gold has always provided that safe house in the investment context. Now, it's also important to note that Donald Trump is also said to be attempting to impose more sanctions on Russia as a way to make them agree to have a ceasefire. A ceasefire is simply to stop the war for negotiation. The war could continue if the disagreements continue, but for now to stop the war, which is an initiative that had begun by the president of France, Macron. Now we see the United States backing him up, and these sanctions also are causing tensions because remember, Russia also has friends. Russia has friends like China. Russia has friends in the BRICS. We see interesting states like South Africa. We see Brazil. So they will, of course, coin something. And we also see a neutral state somehow being in both sides, like India being very neutral on its foreign policy. And all these economic and geopolitical forces move these financial markets. So as long as this continues, we are going to see gold hitting the all-time high. Although on Friday we see that from the daily time frame we closed with a doji indecision. We're going to be monitoring it this week, but long positions are much more safe. Going into indices, the most performing in group of stock by far in the European section, area is the German 40. The German 40 with 40 companies in Germany, or the DAX 40, has been quite optimistic. Immediately after the election on 23rd of February 2025, which was a flip election, we saw change of guard from one party to the next. We saw the Christian Democratic Party winning election. We see the entry of a new chancellor who is said to be pro business. Now, this perception is driving the value of the German stocks or the DAX 40 to increase quite drastically, and we would possibly see this trend as time proceeds. Of course, monitoring the tension happening in that part of the world, which is the Eastern Europe. So long in this context is quite advisable, and we called it out from the retest of this area of interest at 22,199.85. For US stocks, US 100, which is composed of more tech companies, 40 to 50 tech companies, depending on season because they keep alternating. We see that we are still in a bearish momentum, retesting the area of interest. A beautiful marriage between technical analysis and fundamental analysis. This also caused by the tensions. People would not invest in high risk assets. They would go for gold. That's why we see gold increasing in its price because of the increase of its demand and indices melting down or being in a bearish scenario. We could consider getting in for shorts in regards to the Americanas indices, and this particular case US 100. For much more bigger approach, you look at US 500. We just broke the all-time low, retesting it and possibly price printing to the lower side. So short position would be considered much more safer in this context. A scenario that we are also likely to see in US 100, in US 30, or the Dow Jones. So we see indices in the US behaving in a certain manner, being in a bearish scenario, caused by the tariffs, caused by the weakening dollar, which is compromising investors' confidence, then making it reduce in its overall value. On currencies, Euro USD has been quite breaking highs. It's been making higher highs and higher lows. Price is attempting to reach the 1.09585 area of interest, and this bullish momentum in Euro USD, first contributed by the weakening of the United States dollar, two by the seemingly strengthening euro. Euro has been strengthening over the past week, and this strength has been attributed first to countries like Germany stabilizing, because we know the election that was happening in 23rd of February 2025 was an election called by the chancellor to ascertain his authority in Germany in the Bundestag, or the federal parliament as they call it in Germany. They only recognized, constitutionally recognized parliament. After the election, we see a much more stronger euro, and this being much more of the case, would like to see monitor it as it approaches this particular area of interest that I just mentioned. A scenario that we're also likely to see on major pairs. GU just broke this all-time high, broke this area of interest at 1.29010, and price is printing to the upside again, weakening dollar, somewhat strengthening British pound, and after the weak NFP, possibly on major pairs with the US dollar coming in second, or US dollar base currencies would be considered in for long positions. There's a scenario we're also likely to see on SAD USD, kind of slow retesting the area of interest, but we see after testing this area of interest at 0.5545, now price retested this particular area of interest that you could see on the charts. We'd want to see it being broken, but this pair is kind of moving slightly slower. The New Zealand dollar against the United States dollar. Why could this be? Because also the New Zealand dollar is struggling. We remember we saw them cutting interest rates, that is in the month of January, the Reserve Bank of New Zealand. This is because of inflation concerns, to cut interest rate to increase money supply in the economy as an attempt for economy recovery. So they are also not doing really well, but keep a tab on that. On this pair, it would be a risk on approach to trade this particular pair because of these particular concerns that I have mentioned. Off to US dollar quote currencies, we see that those with the US dollar coming first in instance of USD JPY, we are making lower lows and higher lows because of the weakening US dollar, which gives slight advantage over the currency that's being paired, in this context JPY, a scenario that we are likely to see. And it's also important to remember that the Japanese economy has been somewhat benefiting from the actions taken by the Bank of Japan from the Q3 and Q4 of last year. And we see now a recovering phase, because remember, we were in this bearish momentum for USD JPY way into the first weeks of Q1 of this particular year. So not coming in as a surprise in this regard, but we keep monitoring it, because the United States most of the time recover and ascertains its dominance in the international global space. Now, if this is your first time to hear about the financial markets, remember you could access through hfm.com. Type hfm.com on your browser, attempt to register for an account, which will lead you to fill in your details. Our experts will get in touch with you to help you through the account registration process until you get to the investment stage. And as a disclaimer, this by any chance is not financial advice. This is purely meant for educational purposes. It is important to ensure risk management, and in that you will realize with the right information you make more possible profits than losses, and in that way you'll be able to make a profit cap. So with that said, guys, see you tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Until then, keep safe, take care, and God bless.